guys. I want to go over something right now. Bitcoin has dropped a little bit, and it's around the 10K region. It's having some resistance at 10,020, 10,030, something like that. I started seeing a whole bunch of sell walls around that area. But more importantly, is I found the definition of a sniper shot. Last week, for the past couple of weeks, we've been kind of seeing a lot of volatility, a lot of downside here on Bitcoin, and I got to scalp, or I got to swing trade a 7% um, position here. I think my entry was around 99.86, something like that. So we'll just go from here, and I ended up selling at 10.7. So hang on a second, 10.7 exactly. So yeah, it was 7%. That was my position right over here. And what I really just wanted to emphasize on this particular position is the fact that certain things aligned. At the time, I remember I was just paying attention to price action, and kind of reading the tape a little bit, and just seeing the resistance below the 9300. I saw this right here. I noticed that it wasn't going any further down below 9300. So it was like, okay, we reached the bottom here, and it makes sense because there's been resistance here before, right? I mean, I'm sorry, support here before. So right off the bat, when we went up to like 97, 9800, and then we kind of started touching the 99, 10,000 region, that's when I really was like, okay, it's time to pay attention. It's time to pay attention. It's time to enter a position, and that's why I went ahead and entered a position at 99.86, was because it had an upside already of like over 5%, I think. 99, let's just say, yeah, 99, something like that. It was about 6%, right? So right off the bat, I was like, okay, this seems like it just felt right. It just felt right, and I should have added to my position. I should have played my whole account. I would have made about $400, but I didn't. Anyway, but now kind of recapping this trade, I just wanted to emphasize on some more alignment within this particular trade. First of all, I want to just state that we had bullish divergence on the RSI, and meaning we had higher lows on RSI, and on price action we actually had lower lows on price action, right? So what I mean by that is, check this out right over here. If you look at this particular price action, you can count it as 9600, right? Okay, and look at the RSI over here. You can see it's at like 19, right? Okay, cool. Now look at this. Now if you go down over here, price action clearly went down about another, what, 3%, 3-4%? Yeah, about another 3%, right? Check that out. It went down, it was further down, but look at the RSI. Look at the RSI. Shouldn't it be low as well? Shouldn't it be lower than this? Absolutely, it should, right? But it wasn't. It wasn't, and that's a nice little sign that, hey, we're gaining some strength here. We're gaining strength, and it's probably time to start looking to go long. So that was one of the things that I looked at whenever I entered that great position. That was probably one of my best swing trade positions I've had. But okay, another thing is the MACD and the histogram. Now on the MACD, I drew 3 different types of arrows because what I like to see on the MACD is when I scalp on lower time frames, I look to have confirmation not only on the histogram, meaning it's slowly kind of diverging upward, and then it finally upticks, and then most of the time that's when I enter my position. So if you kind of and I also look for a double cross here on the blue line. On the blue line, I like to see a cross upward, and then not too high though, and then maybe a cross downward, and then one cross upward. Like the second cross upward, I like to see kind of with strength, similar to this one. So in this particular case, we saw a downward cross was one, then we saw another one, two, and then three, and then four. I really counted as three, so it'd be one, two, and then the third upward tick was right over here. So where would that leave us? That upward tick aligns perfect with here, with around like 9600. So that could have been our entry point right there. That could have been our last entry signal right there, right? And check out that histogram. Look at that. That's pretty much, that's very, very bullish divergent. It's about to uptick. So on this particular cross, it was already upticking. And if you align that with price action, then your entry would have been around 9650, 9700, and you would have yielded a little over 10%. So my particular position was at 99.86, and there was some good strength here. Now, how long did that take from that signal? And we'll just leave it right there. From that particular signal, it, if you would have wrote it, it would have taken you 5 days to get 11%. So 5 days to get 11%. That's pretty good. That's a very good position. It would have only taken you about, maybe to get 9 to 10%. It would have taken you 4 days, maybe even 3 days, right? Depends how long you wanted to stay in it, but that just goes to show that's what I'm talking about when I'm talking about swing trading. So this particular position, that's how I traded it, and I thought that it was really well. The only thing that I did wrong is that I didn't play enough of my position, because it was a high probability trade. There was a lot of signals that aligned here, and that should have been a different size for sure. So like I said, Bitcoin right now, it kind of fell through a little bit. It's been down about 10% roughly, 9%. So it's been down for a little bit, but I am being very, very patient on my sniper position, and I really am looking for another test to the downside at around 9500, 9300. Still bearish overall. If we look at the weekly, we're already ticking down on the histogram. We're already trading down on the histogram. Still creating this sort of apex kind of deal, and so I still see 7300 as a support all the way to here, right? I still see that. So I don't think that we're gonna reach this level, right? But who knows, really. Pay very, very close attention to the 200 EMA, because if price action falls below the 200 EMA, then that is a big sign of just we're going down, right? We're going bearish. So, and in a previous video, I had stated that this particular 200 EMA goes perfectly well with a measured move. And I know I have a lot of things. Here, guys. And I think I'm gonna upload this video. I think this is upload worthy. But check this out. What I like to do, I learned this from our first mentor. This is called measured moves. So that is a 30% move, right? And if we go ahead and clone that, this particular, I'm trying to get it. Yeah, let's try to get it. I hate that. Okay, that aligns perfect. Check how great that position right here, this clone, aligns with this one. And yes, I understand that this one says 30%, and I'm gonna just use my trackpad, and this one says 31. I understand that, and the reason that even though it's cloned, the different the what is it called? Um, the delta is different on the percentages is because that is indeed what happened. We're looking at a lower price over here, and obviously a lower price over here. So the calculation, the percent change is different. So let's just go ahead and clone this one right now. Let's clone the same thing. If we clone this one, boom, clone this one. Let me go a little further down. Tuck right there. Where does this lead us? Oh man, that leads us to fucking 80. Excuse my language, guys. Sorry about that. That leads us to 8,200. Isn't that kind of like, kind of crazy? Don't you think, guys? Don't you think that's kind of like, whoa? You know what I'm saying? Like, it's a pretty crazy. It's just something that I wanted to, I wanted you guys to kind of think about. This is called measured moves, and sometimes technical analysis doesn't have to be this complicated thing, that everybody makes it to be. Sometimes it can be the simplest things. You know what I mean? Always remember that smart money plays, longer term. So you waiting for a particular region doesn't do, you know don't think that you have to be putting on trades because you're a trader. um, don't think that you have to be doing that. I used to do that, and sometimes I still do that. Sometimes I get a little impatient, and I put on trades. Granted, I started off as a scalper, and I'm kind of transitioning more to a swing trader. um, but I still, if there is an opportunity to scalp, I will go ahead and scalp the market, just because it's what I like to do. I think that scalping offers a very intricate um, level of trading. It's a special skill. A lot of people disagree. A lot of people are like, "Oh, you're just paying a whole bunch of commission fees and blah blah blah," and that is true. There is a lot of commissions involved. But if you're playing a good size, and you're being effective and you're being efficient and you win more than you lose, then you know that you can really grow your account like that. My first mentor said, to me that the best way to grow an account, in his opinion, was to scalp, and little by little grow it. Because when you scalp, you really have to pay attention to you have to pay attention to price action. You have to pay attention to the tape, and being able to read the tape, and look at the order history, and every now and then glancing at the depth chart. That is very, very, very important. And once you swing trade, it kind of just comes together a little bit more. You don't really have to be looking at the tape as you're swing trading. It's a different ball game. But like I said, scalping kind of just puts everything together, and you just kind of have this aha moment, like, oh, okay, I get this. You know what I mean? Um, so yeah, we'll see what happens. You know, we'll see how it goes. But yeah, just wanted to make this video. So hope you guys liked it. See you next time.